In today's episode, we interview Tim from Oracle Investments. Tim has a unique approach to investing, to health, to life in general. I myself find a lot of similarities with Tim when it comes to the cornerstone of investing through budgeting, spreadsheets, and tracking where our money is going. He is also a big investor and believer in Tesla. He covers Tesla a lot on his channel, so he's a must follow if you're in the Tesla community. Tim is a unique person, and his YouTube channel is unique because he gives us a behind the scenes and really pulls the curtains away from everything that he's doing with his finances, his future retirement plans, his health, his fitness. And it's a unique approach, not only to a YouTube channel, but to just a transparency across the internet for what's going on in his life. I truly enjoyed this conversation with Tim. And as you finish the interview, you'll realize that there are many, many more conversations to be had. We are just scratching the surface. There's going to be second, third, fourth episodes in the future as I look to really foster this relationship with Tim. The whole point of doing many of these interviews is really to get to know these special people within the Tesla community, whether it's Farzad, Herbert, Niels, or Tim. There are many of them, and I want to get to know all of them because they bring a unique perspective and they have beautiful life stories that I want to help share with everybody. So, with that said, sit back, relax. Don't forget, follow Tim at Oracle Investments on YouTube, and on X, you can find him at Oracle Tim1. And don't forget, also hit the like button, hit the subscribe button, ring that bell, and help us get to 10,000. I love you all. Enjoy the video. So let me bring him in here. Tim, thanks for joining me.
Oh,
I won't lie. I also know you as Oracle. I think I associate Oracle with you more than Buffett at this point.
nice. Oh, wow,
So
that's
yeah,
an
no, I'm not
honor.
even joking. Yeah, so it's funny. So for anyone who doesn't know Tim or doesn't follow Tim yet, make sure you do it. Go like, subscribe, do all that good stuff. Let's go ahead and get all the plugs out of the way. Tim, what's
Oh, yeah.
your X handle, your YouTube channel, all that?
Yep. X handle is Oracle Tim1 and YouTube is Oracle Investments.
Okay, awesome. Yeah, so everybody go follow, subscribe, like, do anything you need to do. Follow. Tim is I think one of the people in the Tesla community that I think is more his content is more somewhat like my content where it's not just strictly Tesla per se, but he talks about all kinds of stuff, from just general finance, macro, health, just all kinds of topics. And so hopefully that's what we get to do today. We'll talk about all kinds of different things, but before we even get into Tesla or any of that other stuff, I kind of want to just get to know Tim a little bit here. I know a little bit. I think you're up in Connecticut. You have, well, I'm not even going to sit here and tell people. Why don't you tell us, like, who's Tim? Where's Tim from? How did Tim get to where he is today?
Tim came out of the sky, just appeared out of
Ooh,
nowhere. Yeah, I'm in
the
Connecticut.
stork brought him.
Yes, yes. Stork dropped me off. Yeah, I've been in Connecticut my entire life. I've moved all over the state, and ironically, I'm moving again next weekend to another part of the state, which I was in previously. But I do eventually plan on moving out of here. I was, um, man, getting myself into investing is like one of those things where as like a 6-year-old, I saw what it was like getting interest from my bank account. Now, 6-year-old for me, this is the early 80s. So interest was pretty darn high back then. It just never stuck. Like the whole, buying the cool shiny thing was what I wanted. My parents didn't have a lot of money growing up. So like I wanted the cool shiny thing that all my friends had. So I lost sight of what could have made me a multimillionaire at this point. Hey, it is what it is. But yeah, lately I've learned about the investing and community with Tesla. I started this channel 2 years ago about investing in life, everything about life, like you said before, not just wealth, but health, everything that you can do in life, adventures, spending time with family and friends. It's so vitally important for you. We only get one shot at this thing, so make the most of it. And in the process, I found Tesla. So, that's just a piece of what we do. And it just happened to be so popular with the community. So, it took off. But, in my life too, the last 10 years, I've done a lot of obstacle course racing. So there's a lot of great communities out there. Spartan, the OCR community, now the Tesla community, and there's a lot of similarities between the two. The passion for it and the knowledge and wisdom you can gain, and they overlap a lot between health and wealth. There's a lot of overlaps. So that's kind of where it's culminated to me now and where all of my wisdom has come from. And so now I'm trying to put all that wisdom together to take myself to the next level and help teach, other people in the place I'm in right now what I've gone through, and also trying to teach people who are younger like my son who's 16 what it's like, to prevent the mistakes I made so they don't have to go through that and they can get in a better place at this point in their life when they get there.
Nice. So why YouTube though? Like what made you? Because it's a big. I mean, I always talk to people and they always tell me how they want to start a YouTube channel and all that stuff, and I always tell them, okay, well then start. And they're like, well, I don't know, or, how many episodes what I'm going to talk about, and I need to, right? They make all these reasons why they have all these obstacles, and it's a real thing, right? I mean, you're putting yourself out there into the world, so it's I think at this point, after you've done so many episodes, right? Like you're kind of numb to it and it's just a normal thing. But that first leap into it to say, hello world, this is who I am. Don't judge me too hard, even though this first episode is probably going to get like one view. Maybe it'll like, and it's probably, my mom or my sister or something like that. What made you want to go onto YouTube and take that leap?
So for me, like I had done a few videos. If anybody wants to, and you're on my channel, there's some old Easter eggs in there. So I had a
I've
channel.
seen them.
Yeah, I had a channel years ago for health and fitness, and there's topless cooking videos with myself, no women, so that's totally appropriate. And then there's just some fitness stuff that I had done. So I'd started doing that earlier, and I had no idea how YouTube actually functioned, the algorithm, anything like that. I had no idea I could actually make money from it. And when I actually first started it, I think you needed there were no stipulations. Like you didn't have to have 1,000 subscribers. You didn't need to have 4,000 hours of view time. You just make them and you're good. And so ironically, I had like $5 already accumulated from years and years ago that I never
Oh,
got
get
paid
out of
out because I
here.
didn't hit minimum until I actually hit my minimum here with this channel now. But that's where it started, was just the health and fitness. And then I did nothing with it for a couple of years and decided, let me get back at it. Let me do this. I just wanted to share with people because I was on Facebook and Instagram, and those are fine, but those are like, I don't want to call them the older generations, but Facebook is, like the boomer social media platform. So my parents are on there and a bunch of my friends because it's borderline millennial, but it's like, how do I reach a larger audience, especially with videos? And YouTube is just the way to go for me. So I started doing it, and the first couple of videos, like you said, it's just, man, my editing was horrible. Like it was just, oh, so ugly and rough. But then I started doing it. I mean, I have pictures of myself when I started. I had literally my workout bench, a couple of books, and a little tiny tripod with my phone on top of it. That was it. That was my whole studio.
Mhm.
Blank wall behind me. Man, it was hard, but like you said, you just have to put yourself out there. And the overthinking, that was real. A lot of real overthinking. What do I talk about? How do I do this? But yeah, like you said, after you get into it, you're just like, whatever, just shoot from the hip. It doesn't matter. It is what it is. I am who I am. And honestly, if anybody out there, my recommendation, if you are starting a channel or thinking about doing it, just be you. It doesn't matter. Make mistakes. Be real. That is the most important thing you can do, because being not yourself makes things so much more difficult in the long run. Just be you.
Yeah. Yeah, I remember when I started, it was kind of similar. It was just my phone and actually these headphones, and I used that as the mic, and that was it. And it's honestly it's a little cringe looking back at it.
Yeah.
It's like, man, like you have no personality when you speak. Like you just and then the pauses too long, man. Like just speak organically and but you put so much thought into it. And then, you iterate over time. Like I used to over edit. I used to way over
Oh,
edit,
yeah.
and now I barely edit anything. Like I don't even care. Like at this point, it's like I'm just here for the good content, and then just try to speak as smoothly as possible. You know, be cognizant of any ums, uhs, and stuff like that. And
Yeah.
yeah. So
That
it's
was
pretty easy at this point.
same thing. And I've contemplated just not even doing an editing piece and just doing it live, because I do enough live streams anyway where it's not really going to matter. And the ums and ahs. So ironically, when I was in college, I hated public speaking. Did not like it. Like I did everything I could to avoid doing presentations at school. And one of the things that my teachers, I was a history major, and my guidance counselor was like, "Hey, so you're going to go be a teacher?" I'm like, "No, I don't want to be in front of a classroom of students." So I just never ended up using my degree. I ended up working at Home Depot, and because I was so good at being a department head, they had me do a presentation in front of all of my peers. I'm like, "Crap, now I have to do this." And then I became a Beachbody coach, and as a Beachbody coach, now I'm speaking in front of hundreds of people. And so I had to learn the skills of public speaking, and, being behind a camera is totally different because there's not an audience. If I did enough of it, I think I'd be able to feed off of the audience and get used to that. But I had to along the way learn how to, the tips and tricks that people do to not say the ums and ahs. And, if you ever look at like a president, Obama was really good at it, is when they publicly speak, they don't do that. And you'll notice that if they get to that point where you think that they would do an or an ah, there's just a longer pause because that's a mental trick that you teach yourself is to just pause instead of say something.
Yeah, it's funny. I like am so aware of when other people are speaking now. I'm aware of words that they use repetitively over and over. I'm aware of ums and uhs, hand motions. So, for example, Mark Cuban, he'll say something and he'll say right. He'll say like
Yeah.
Tesla is going to be the next big stock, right? And they're going to do XYZ, right? And he just keeps saying right, and it's like, man, you're like almost seeding this manipulation. Like he's right, right? Like you're agree with me.
Oh yeah.
Obama, great example, right? He always his hand motion
Yep.
like this, just always pointing, and it's funny just to see like these little idiosyncrasies, but these are things that people study and actually implement into their words, their mannerisms, or whatnot to buy trust from people. So it's interesting to see that. I mean, I've never gotten too much down that rabbit hole, but it opens your eyes to the things, the mannerisms, and the way people are saying certain things.
Oh yeah, and the whole hand gesture is like I'm Italian, so I speak a lot with my hands. So if I'm on stage, I've got to wear a headset because if I'm using a microphone, that's like almost silencing half of me because I have to hold the microphone. And then like the hand thing, I remember you ever see Bill Clinton did this. A lot of
Mm.
politicians do that because this was studied to be like the least. It's just the most neutral hand gesture you can give because it's not pointing at anybody. It's not offensive. It's not going to take anybody aback. So this was the most neutral hand gesture you could make.
Yeah, there's also this one.
Yes.
Yeah.
Yep. The
So
thinking man.
yeah, exactly. So let's back up real quick because you said you've lived in Connecticut your whole life
Yep.
and you've moved around in Connecticut. Um, But before we started this and hit play, today's Sunday when we're recording, and I just learned that Tim is a Panthers fan, Carolina
Yes.
Panthers, which is funny because, as most of you know who follow me, I live in St. Petersburg, the Tampa Bay area. So that means I'm a Buccaneers fan.
Yep.
So we are inherently don't like each other in the football world. So, how does someone from Connecticut become a Panthers fan?
So for me in high school in the early 90s, I was basically a front runner all the time. And I just liked whatever team was doing well. I'm a huge sports fan. I played baseball growing up, and it's very much like my mom. My mom was just like, I'm just rooting for all these guys to have fun. And so I was always a front runner, and of course Dallas was great back then, but I didn't want to be that guy. I didn't want to be a front runner. So when the Jaguars and Panthers came out, I was like, oh, I'm going to pick one of the two new teams and just root for that team, and I just like the
Mm.
Panthers colors better, so I stuck with them.
Okay. All right. Well, that makes sense. Yeah, you maybe not the best season for you guys, but
Yeah.
you've had some ups and downs.
Oh yeah.
You had
Early on, it was
McCaffrey. You had
awesome. I mean, the defense with John Fox at the helm, there was a lot of great teams early on. And that was kind of the thing. And we've had some streaks here and there. We've had some moments, but lately it's just not been good.
yeah. So you think you might leave Connecticut eventually? I think if I understood you correctly, I imagine you're waiting until your son goes to college or he's 18 or something like that.
Yeah. So he actually graduates high school next year. He's a
Oh,
young class.
congrats,
He
man!
was like,
Finish off hard.
yeah, yeah. So he was like me. So he's only six. He'll be 17 when he graduates.
Mm.
But he's looking to go to school at a couple places in potentially New Hampshire. So we're kind of hoping that's where he chooses because his mom and stepdad are also looking to move up there as well because it's no taxes and we can
Yeah,
get
that's
in-state tuition for him, which will make it cheaper. So for me, I've been setting myself up financially for the last 2 or 3 years now, and getting myself out of debt, building up my net worth, building up a huge cash stockpile for some real estate, just to kind of give myself options for when that happens to figure out what I want to do. But if he ends up going to college in New Hampshire, I'll probably buy a place up there first. But then I want to buy a van and travel the country and just buy real estate all over the country. That's kind of my future plan, and a castle in Italy.
nice. Oh, wow. Yeah.
Yeah.
I hey, hope I'm invited.
Oh, absolutely. Oh yeah. Everybody in the community is invited once I get there.
Um, yeah, so my wife's sister, so my sister-in-law, she lives in West Hartford, and
Okay.
then again, my wife's parents, they live just north of Boston, just, in the suburbs out there in Andover, which is like maybe like 30 minutes from the border to New Hampshire. So it's
Nice.
it's
Yeah.
definitely a nice area up there.
Yeah. I'm moving to actually Newington, which is about 20 minutes from West Hartford. My brother's in Avon, which is a rock's throw away. So
Yeah, nice. Well, that sounds kinda awful, to be honest. I hate moving.
yeah.
But
Well, since my divorce, I've moved 12 times now in the last 12 years.
oh, you
No,
need to start a
13 years.
moving company.
Yeah, so well, it was funny. My brother and I did work for a moving company, two young studs moving, and so we did some moving, so we have a lot of experience with that. But it's yeah, a lot of moving is not fun. But it did one thing that moving this much did teach me was how little I actually needed in life,
Mhm.
and so I was able to downsize significantly. And there was one bad decision I made a while back, and I was able to throw all of my stuff into my CRV and move. So now
Nice,
now
yeah.
I've been in this place for 3 years, so I've got some furniture I'm trying to dispose of, but the place I'm going to, I can store some, but I don't need furniture where I'm going other than a bed and my dresser.
Yeah, we're pretty minimalist, my wife and I. We don't like clutter.
Yeah.
We feel like, less is more because when you have, like, things you like and you appreciate, there's too much crap. It takes away from the appreciation of the stuff that you actually like and you might have spent money on and just takes away from it.
Yeah. Well, one thing I've learned too is when it comes to functionality, if there's something that I haven't used in a year, just get rid of
Get
it.
rid of it. Yep.
Don't need it. I mean, I went without a computer for 7 years,
Oh.
and the only reason I got one was for this channel. I did everything. I was like, I tested
Tax
myself.
write-off.
My laptop died, and I'm like, can I do everything I need on my phone? And sure enough, I was. I was able to literally live my entire life as I needed on my phone. So that was
Wow.
good to go there. Didn't need it. And then this channel, the laptop did make it easier, but like you said, it was a write off. So I was totally cool with that.
Yeah, no, exactly. So how all right, so Tim, Connecticut, Panthers fan, doing the beach body coaching, getting the fitness, working Home Depot, doesn't want to do public speaking. How does all that help get you to a point where you discover Tesla as a company? Not even an investment yet, but as a company. Like, what was like what led you to first hear about Tesla or Elon, or at least capture your interest and imagination into it?
The first was, and I'm so mad at myself for not, and it just timing wasn't right, but I would say it was probably 2013 or 14. And I had just started the current job I'm with now. And a gentleman drove up with his Model S, and we
Mhm.
all went outside, and it was so awesome. The door handles came out. It was like unbelievable how awesome this car was. And the guy was so excited about it, told us all about it. But back then I wasn't investing. Had I been investing, this would be a totally different conversation right now. But that was my first introduction to Tesla itself. From there, I lost sight of a lot of different things, was involved in so much other stuff. I was going through the divorce at the time. And then about 2.5 years ago, my buddy who I went to high school with and I grew up with told me about Tesla. And he actually now works for Apple. He does a lot of the top secret projects that he can only tell me I cannot confirm nor deny stuff all the time. I was like, dude, just tell me. But he got me into Tesla, and he wanted to go work for Tesla. But he's like, here's the difference between Apple and Tesla. Apple pushes you hard. Tesla is like 3 to 5x how hard Apple pushes their people. So, so he's like, I'm not going to go over and work for Tesla, although he's been thinking about it. But he told me all about it. He was so passionate about it. So that's what got me into it initially. So I started looking at it in the stock and how exciting it was. So that was initially my kickoff, was just that. So I had just started the channel for all around investing, and then he kind of brought that into it. So I was like, oh, let me spit out some information about Tesla. I made a video of just a Tesla split. The video took off, went viral, and the rest is history.
Okay, so what were you investing in before Tesla then? Like you want to start this channel for investing, and well, I guess really even working further backwards because if you got to a point where you want to start a channel about investing, you must have started investing earlier than that, right? To the point where you thought that this was a passion of yours. So what got you into investing? What were you investing at the time that you led you into the channel before Tesla?
So it was actually a lot of things because it was right around my 40th birthday, and I'm like, I'm 40, and what do I want to do with the rest of my life? Like, how can I make every action I take in my life be something that I'm going to look back on and be proud of myself for and be happy with? And so I was like, investing isn't just about money. So I made the channel initially for, health, wealth, family and friends, adventure, all sorts of different stuff. And so I started making those things and just kind of more of a vlog more of what I'm currently doing with myself and saying, hey, this is what I'm doing. Maybe it's something you guys can do, or you can share your information with me. Maybe it's something I can do for myself. So when it comes to wealth itself, I was investing in, it was a lot of cheaper stocks because I didn't have a lot of money and I didn't know a lot. My dad was giving me a lot of education. He's like, it's better to invest in good stuff. So I was shifting away from some of the junk, penny stocks and stuff like that I was trying to make, fast money with, more gambling, and shifted all of that into some more quality stocks. And as I was looking at the quality stocks, that's when Tesla came up. And so I was like, all right, well, Tesla was like, it was way out of my price range. I was like, but I really wanted it. And so looking at fractional trading, I learned a lot about the fractional trading side of things. I was like, oh, I can still get Tesla stock. I don't have to buy a full share. I could buy partials. And so it kind of just spiraled from there, getting myself a little more mature when it comes to investing. So I'm not trying to gamble, and I was doing more of the wise investing. And it just kept taking off from there. And I was like 70 something percent in Tesla for quite a while. So I was just like, let me just put as much money in there as I possibly can. And since then it's kind of spread out a little bit, but
Yeah, so it's interesting. Something that I love about your channel is that yes, you talk about investing, but I get asked all the time, right? All the time, people ask me like, "Hey, I want to start investing. Where do I start? What should I buy? What stocks?" And the first question I always ask them is like, "Yeah, can I see your budget spreadsheet?" And they look at me like, "Ah, I don't really track it, whatnot." I'm like, "Well, but you're asking me how to invest, and I'm asking you for this. You don't even have that. Well, that's where you start. You don't start with a stock. You don't start with a brokerage account. You don't start with options. You start with your budget spreadsheet. If you don't know where every single penny is coming in and going out, where do you even start? Because you're not going to care that much about your investments if you can't even care enough about your current investment of your time into your employee that gives you money and you don't care enough to track that. And that's
yeah.
arguably like the most valuable money you have because you're trading your time, your life for that. And so I love that in your channel you talk about your budgets and your spreadsheets, and I think that there's lots of like channels out there I guess that talk about stuff like this, but I don't see a lot that talk about your budgets and your spreadsheets and then also investing in the stock market. And to me, they go hand in hand, but you have to start with the your personal budget. So I love that you do that and you're so transparent about your own budgets and everything, which is pretty amazing. So, well, tell me a little bit about that aspect of it, why and when that became important to you to track your own spending and finances coming in and out.
Yeah, that to me, and that's actually what really kicked everything off. Um, it was, gosh, I want to say probably 7 or 8 years ago. I finally was like, you know what, I can't handle all of the debt that I'm in, so let me try to get rid of this. So I actually have, ironically, still in front of me right now. This was how I started. It was all paper because I didn't have the computer, so it was paper and pen, and I would
Nice.
write down, the week. And so this is how I budget. I would have a calendar, and I would now know this is what I'm getting paid this week. These are the bills that I have to pay. These sheets here are all the different bills that I had to pay, all the credit card debt that I owed my dad money. He was kind enough to give me some money to pay off some credit card bills so I could pay him back with zero interest. And then I learned how to, open up the new credit cards and do the transfer balances as much as I possibly could, trying to bring my credit score up. So all of that, I was like, I need to get myself free because my vision was looking at my son. How can I give him a better head start in life than I did? My parents were great to me. I had no problems with that. And my dad has taught me a lot. But how can I get my son to the next level? And
Mhm.
that was, well, first off, I can't be passing off debt to him. I can't be giving him these problems. So let me get rid of those. Then let me build up wealth. So the whole time I started tracking wealth. So it was about 7 or 8 years ago, I started tracking it. And I started tracking it when I was about $75,000 in debt. And I just ironically updated my sheet this morning. So now I have a net worth of 140 grand. So
Wow, that's a swing.
yeah, 7 years, I flipped it around more than double, triple actually. So that was big, and just getting that snowball effect. So that was really what it was just needing to get myself out of that and then tracking it. And like you said, and on my channel every month, I do the full spreadsheet. And I think it's important to be transparent because if you're going to be out here and try to share with people what you're doing, but you're not going to show them exactly what you are doing. Again, none of it's financial advice, but it's, hey, this is what I'm doing for myself. You can see the success I am making. You can see the challenges I'm facing. You can see the struggles. All of my members and patrons see this as well. And they get every single week I update it for them and say, hey, these are the challenges I'm facing. Like this month, I'm moving. My net worth dipped quite a bit. The market's pulling back. I have a lot of extra expenses. I had to pay for rent for 2 different places for a month, and so it's like little things like that, but it's good to be transparent because people can understand your struggles that you're going through, and then they can learn from your wisdom. And hey, I can learn too. So if people see what's going on, they say, hey, here's a couple ideas that I've done. Sweet. Now I can make myself better also.
Yeah, something that I love about the having your spreadsheet and track, like literally, I track every single penny, and I've
Yep.
done this for I have over 10 years on my MacBook here. I track everything. I don't use Excel, I use numbers, but literally 10 years of tracking here, and it's every single month. And if you look at the sheets over the months, like they've been iterated on, so they look different, and they've
Oh, yeah.
evolved, but one of the things that it really reveals to people, and I think it's a hole people get caught in, is we'll do a month, right? We'll do October, right? I actually, this girl that I work with, she was just asking me like, how do I start investing all that? And I told her, create your spreadsheet for October. Doesn't have to be perfect. Just start it, and then we'll review it together and we'll iterate. But what happens is when people have their budget, inevitably they'll be like, well, I don't always have to buy new tires for my car. And then the next month is like, well, I don't always take this vacation that I'm going on. And then next month is, well, there's not always this wedding. And what you start to realize is that these things that you think are one offs, and that, like, okay, well, next month it'll be different because I'll pay it off and whatever. Every month there's some one off that comes up. And
Yep.
so you start to, it becomes a mirror to show you that these one-offs that you're saying like, oh, it's not a big deal because I'm not going to have to get new tires next month. But then, oh, it's not a big deal because I'm not going to have a wedding to go to next month, and like these things start to pile up, and then that's where you can get into real big trouble because you're always writing things off as a one-off. But when you have your spreadsheet, it doesn't lie to you. Like the numbers are the numbers,
Oh,
and it
yeah.
shows you the truth, and you can see which way you're trending towards. And it opens it, because I tell this to people all the time, and they don't believe me. They sit there and they'll push back on me saying, "Well, no, I don't think I have that problem." Like, listen, everybody has that problem unless they track their spending, because then they're not accounting for it. You're
Yes.
not
That's why I
accounting
have
for those
other
one-offs.
expenses always budgeted for.
Exactly, exactly. Yeah, I have like I said, I've iterated over the time, but I have an allowance
Yep.
of just spending allowance. And so if there's something that, if we're say it's a wedding, and I know it's going to be $1,000 for tickets and everything that encompasses the wedding, well, that comes out of that monthly's like free expenses that I'm allowed, like my budget for that, or my allowance for that. And so then I have to, let's say it's $1,500. Well, that thousand for the wedding gets subtracted. So I only have 500 of discretionary spending I have for that month, and I have to live within that. Doesn't mean I'm always perfect about it, right? Sometimes I am, sometimes I'm under, and sometimes I'm over, but it allows you to be cognizant and predictive of what you're doing rather than just dismissing it as one off. So
Yeah,
that's a tangent, something I'm passionate about.
but you're right. But because preparing with that little cushion is so much better than getting blindsided by it constantly. And
Yeah,
having that budget up, and I do the same thing every single penny. Like even when I get my dividends, I got 17 cents. That's going into my spreadsheet. 17 cents. It makes a difference. And then I can track those as well and see, all right, are those growing also? And you're absolutely right, because when you start tracking all of that, then you start to see things. And I see all these apps and things out there. Oh, how to find out what subscriptions you may have that you didn't know you had. If you've got a budget spreadsheet, every friggin'
exactly.
you don't need an app. You've got your spreadsheet. I know every single subscription that I have. Don't you worry.
Yeah, exactly. Yeah, I think those things are comical, or even honestly, even the apps for creating a budget. Man,
Yeah.
they're awful. They're absolutely awful because they can never categorize, or there's something that's like an anomaly. Like I don't. I mean, I don't. I can't remember off the top of my head how you have yours structured, but essentially the way we have ours, because now it's not just me, it's me and my wife. But I'll have like one column of just our fixed bills. And it's like, it'll be like October 1st, October 2nd. And whenever it hits, I have what it was last month, what it should be this month, in case there's a delta or change. I want to know about that, because
Yeah.
sometimes these companies, they like to, do little tweaks here.
Oh
But
yeah.
I have like a column for fixed bills because that's non-negotiable, right? Those are going to be reoccurring.
Yep.
Then I'll have a column. It's just N for my name, and those are my spending things, right? Things that I only spend. Then I have a column for my wife and me, and those are things that we've spent together, like things that are both of us. Then there's a column for just my wife, and then there's another column that tracks my entire checking account, all the inflows and outflows. And so
Okay.
every single month, I know exactly what's going on. And then for my wife and I, at the bottom of it, just because it became a little ridiculous to sit there and just write like every single like time we go out to eat, or every time we go to the grocery store. Like if I did that day by day, it became just too much to put in. Like it got a little annoying, but also there wasn't enough signal for me. So
Yeah.
instead, what I do is at the very bottom, I have just food or groceries, and then eating out
Yeah.
tabs, and I just continuously add into that. That way, at the end of the month, I can see how much did I spend completely on groceries, how much did I spend completely on eating out, and that's signal, right? Because like, all right, it's signal for health, because
Oh
guess what?
yeah.
When you're eating out more, like you can lie to yourself, like, oh yeah, we've been good, and you look at that like, all right, no, we haven't been that good,
Yeah.
but that's essentially how we structure it. Every month we can see it, and like I said, we have like allowances. So at the bottom of the spreadsheet, everything's aggregated, and I have an allowance. And so as that allowance works against the spending, it slowly goes down in number, right? So like we'll just use the same number, 1500. Start at 1500 on October 1st. I spend. That 1500 drops 1400, 1300, 1200. By the time
Yep.
it has like $200 left on it, the cell is red. And
Yep.
again, that's more signal saying like, hey, you got $200 left before you're over your budget. Chill out. So
Yeah. I
I like
actually,
that tricks.
from being a retail manager for 15 years, I'm very familiar with P&Ls, profit and loss statements. So I created my own. And so I now have mine for the entire year. So I use that, and I use that, like you said, for your allowance. Those are the numbers that I plug into my spreadsheet for my budget, because that's what I have allotted for myself for the entire year. And of course, I do tweak it as the year goes on. Things change, life changes. But I've got the same thing. And so mine is a whole column on the side. I've just got, it's date where I made the purchase, what the purchase type was. I've got my groceries, gas, anytime I go out with my son, any expenses for him. And then it's just either income or expenses. And then I've got the same thing on the last column, which is when I go into negative cash flow. So I was like, here's my starting balance for, the month. And then as I go down, if I go into the negative, it goes into the red. And so I'm in the red right now because of the current expenses. then I have it all tallied together what my current cash flow is for the entire month. And my goal obviously is to be positive cash flow at the end of every month. That extra gets put wherever, whether it's savings or an investment. I also track in mine all of my investments. So anytime I have money coming in, I track, and my colors like income is green, investments are blue, and then expenses are red. So anytime I have an investment, it goes in the blue. So anytime I get dividends coming in, that comes in as green income, but then I send it out as a dividend reinvestment as a blue.
Mm.
So I track all of it that way to make sure, all right, what are my investments? So right now, I'm currently investing about 50% of my income into
Wow,
investments. So I'm
that's
investing
great.
50%. And so that's the way I'm tracking all of mine, is to make sure, am I investing it all? And then do I drip? Do I not drip? Totally different conversation. But it's still a matter of all of that money is still ready for investing in one manner or another. And so that's to me how I had all set it up, was so I could track literally where every penny is going and make sure, am I investing? Am I investing too much? Like, I don't ever want to say I'm investing too much, but I got to make sure the bills are paid too. And if I can't pay the bills, then it's a problem.
Yeah. So yeah, it's funny you say that, because I've definitely been guilty of investing too much. Um, I hate to admit this, but I'm a serial person who's like, all right, well, I know my paycheck's gonna come in at the end of the month, and I know, every month I take X amount and I throw it right into the markets, and maybe that's like 6 days away. All right, well, I'm just gonna go ahead and buy it, and it'll be on margin for like 5 days, and then, all right, well then I'll just transfer the money. Like it's honestly a sickness. You know why? Because it's almost like a little bit of FOMO, like when things are happening. But inevitably, every time I do that, if I would have just waited till like my check actually hits and I transfer that money in, I would have
Oh
gotten a
yeah.
better price
Yeah.
every freaking time. Like not
Yep.
once have I been, and I'm trying to think of, like the laws. Like eventually, I have to make a good decision here. That doing like these 6 earlier days would have made a difference. Hasn't been once, and it's so frustrating.
Oh yeah, I do the same thing, and I don't go into margin, but it's like right here, for instance, in this month, I'm like, oh man, these prices are looking real juicy. I was like, let me throw a couple extra dollars because I know I've got that paycheck coming in. I know next week I'm supposed to be seeing a bonus coming in, so I was like, I can spend a little bit more right now and just kind of back it up in the end when it comes in. So I try not to do that too much, because I've, just like you, I've learned if I just let nature run its course, it's probably going to work out better than when I try to control it.
Yeah, yeah, it's awful.
Yeah,
It's like I know I am so automated on everything about like the money going in. So like it's this isn't like a risk at all. Like I
right.
know this is gonna hit. I know exactly how much it's gonna be, and so it's just me buying like maybe at most like 8 days before I know that money's gonna flow in. But yeah, yeah. Don't time the markets. I suck at it.
No, but it's one of those things where if you're gonna be spending your money on something, we'll call it frivolously, it's, you're investing, and you're not investing in garbage. You're investing in good quality companies.
Hopefully,
So all yeah, yeah. So all we're really realistically losing is time, if anything. So it's not like we're losing money. It's not like you went out and you bought yourself, a nice new pair of Nikes or something. So,
yeah.
it's totally different when you're going out there buying Nike the stock versus Nike the shoe.
So before diving into Tesla, I'm sure I'm probably not doing myself any favors for subscribers or likes or anything. Which, by the way, subscribe and like, just talking about spreadsheets without even
So
showing a
exciting.
spreadsheet. It's so invigorating of a conversation. But do you have any tricks that you employ, like on a for what am I trying to say here? So like, let's say it's beginning of November coming up, and let's say that you want to stay within your budget. Are there any like tricks that you employ to make it one so you can stay within your budget, or so that you can feel like your budget's going further for you in that month, or that you can feel, I don't know, more comfortable like going into the second half of the month and spending more on luxury stuff like eating out and things of that nature? Any like tricks that you employ?
Yeah, actually, one of the biggest tricks I ever taught myself early on was when I'm doing my budget and I set it all up. So, like, I'll know ahead of time. So, obviously, most important thing is to set yourself up with a budget. Like, basically calculate out how much money you should be having coming in. It's different for everybody. I was salary for 15 years, so I had a set income coming in. And if I did get commissions, I never counted that in. That was extra.
Mhm.
So, I'm extremely conservative. I round down with income, round up with expenses. So if I have, a budgeted expense for electricity of $73, I'll round it up to 75. I usually round it to the nearest
Yeah.
five, and income I round down. So this way I always have that extra padding at the end of the month. And I try to be, and every time I do it that way, I'm always a lot more frugal with my expending. And at the end of the month, I have this nice little, Easter egg surprise to be able to spend some money on.
Nice. Yeah. So a few things I'll do, especially after we had like an expensive month, and it's like, all right, well, we definitely weren't within budget, and we need to tighten things up here. But some things I'll do with my wife is, so let's say you have your discretionary spending, right? Like, again, we'll just keep using the same number, 1,500, just because it's easy. If I have $1,500 that we can spend on things that aren't fixed bills, that aren't investments, they're just money of just random spending. And what we'll do is for the first week, we will not do any discretionary spending at all. Because now, instead of having $1,500 over 4 weeks, you have $1,500 over 3 weeks. And that feels like luxury,
Oh
right?
yeah.
It's like, oh, I have so much more. And it's all you do is in that first week, everybody cannot spend discretionary for 1 week. It's not
Yeah.
hard.
No.
But so now instead of spreading over 4 weeks, it's over 3 weeks, and it just feels so much more. Another thing that we'll implement, and we don't always do this, but like just whenever we're feeling like, all right, that was a crazy month before, we'll have a rule where for this month you can only spend money on a Saturday. That's it. Nothing else can be spent outside of a Saturday. And
That's
what
like
that
health and
does,
fitness. That's your cheat day.
yeah, yeah, exactly. But what it does is it prevents um like drip of, oh well, it's just $5 here, oh it's just $20, it's just a quick
Oh
Amazon
yeah.
thing, oh I just need
That
that.
adds
It's
up.
like, no, no, no. Saturday's the only day you can spend. So groceries, if you need to go anything, like doesn't matter what it is, it's only on that one day. And that does a couple things. One, it prevents that slow drip and decay. It prevents you from saying, oh well, I'm just going to go to the grocery store and pick this up, oh well, I'm just going to go back to the grocery store and pick this up. You have to get everything on Saturday. You better think about it, because there's not going to be all these like little trips back to the grocery store to pick this thing up and that thing up. Things that you want to buy, you're like, oh, this is cute, or this is nice, or oh, that would be interesting. Well, now you have to wait till Saturday. And by Saturday, a lot of times you're like, I don't really need that. I don't really care
Yep.
about it. So those are a couple like tactics that we've deployed that I think tend to be pretty helpful.
I like that, because then too, like all those trips, it's like it's gas, or electricity with your Tesla. And, it is what it is. It's still going to be another expense. And for me, I had always set my life up to be as boring as possible. Like I like to go out and adventure. That's one of my big things. But the more boring you are, the more money you're going to have. And like when COVID hit, I really didn't notice much change in my lifestyle, because I don't go out, I don't party, I don't do any of that stuff. Like not being able to go to the gym was like the biggest change, but I just worked out at home.
Hmm.
And that was really it. So yeah, just being boring helps. And like you said, for that first week, being boring. And if you get used to that, then you're good. And then you can build up wealth. And my mentality when I started doing that for a long enough period of time was, ooh, if I can live, I learned a saying, work twice as hard now so that you can work half as much later. And I was like,
Yeah.
if I take my extra time that I have now, and that's where I started this channel, it's like, ooh, if I can spend time making money with a YouTube channel and educating others and doing that, then I can spend that money and invest it. And now I can work twice as hard now so that I can retire sooner. I didn't want to retire when I'm 65. I think that's ridiculous. It's like my dad retired when he was 57. Can I retire early as well? Can I retire before I'm 50? So what do I need to do to get there? And I have a video game mentality. I grew up playing, RPG video games, and that is, all right, what do I want my character to be at end game? How can I get from here at the beginning to end game as quickly as possible in the best manner possible? And so that's just what the same thing that I've employed in my life, and implemented this whole strategy of how do I get myself to my end game character as quickly as possible? And living boring life is part of that. And I adventure with wisdom along the way. So I still go out there and don't just not enjoy life. I still enjoy life. I just do it within the bounds that I need to be able to get myself to end game sooner.
Yeah, we so like we tend to find a lot of fun in doing, things that can be free, right? Like we'll take a Yeti and we'll make like a little cocktail in that Yeti. And we live in Florida, so we'll go for like a really nice walk and we'll just hang out at a park with our dog and just play around, and just that's like us out drinking about together.
Yeah,
Like
but
where I
it's so
live,
much
it's all
fun.
walkable. Yeah, we'll go to the beach again free. We'll bring our own drinks. We'll make some sandwiches and bring it with us. And it's amazing. Like, and it's all free, right?
Yeah.
Sure, it's your grocery bills, but like it's free. So it's I don't know. I think there's lots of things you can do that are free out there in life and that tend to actually be better for you. It's out in nature, whether it's going for a walk, going to the beach, getting some sun, going on a hike, and it doesn't cost you any money. And
Yeah.
you can bring better food, better drinks, and not have to spend all this money on it.
I know that there's so many things too. Like it always drove me crazy, if I wanted to go to a state park and I had to pay money, and I'm like, why do I have to pay money to go enjoy nature, enjoy the woods?
Yeah.
It's ridiculous. But there are plenty of places out there. And with when it comes to health, meal prepping is one of the things that you want to do because you're preparing your own food. And when you start looking at it from a wealth side of things, the budget is a lot lower when you're preparing your own food. You are in control of that. And so for me, I noticed that when I started doing all my meal prep, I cut my budget down by about 30% just when groceries.
Wow.
It was nuts. And so right now my grocery bill and I splurge every week. I get myself for my fun. I get sushi every single Saturday when I go grocery shopping. But my budget is still under $100 a week for groceries. And that's how I keep it. And so I know that, hey, I'm under, like this week it was $93. Cool. Now I'm $7 under budget for the week. Cool. That was an extra $7 that I can put into my cash stockpile for later. And I don't spend it right away. I don't invest it right away. I keep it there because you never know when those random expenses come up. Like 2 weeks ago, my car battery died. It was $200. It sucked.
Oh,
But because I budget so well, hey, I had no problems. Here's $200. I'm good to go.
so let's just to be cognizant of time. I tend to just want to talk about all different
Oh
things,
yeah, I can
and
ramble forever.
if anybody is still on listening, let's get into some Tesla talk
Yes.
here. So you correct me if I'm wrong. And this is how you know I watch your episodes. I feel like you have somewhat changed your investment strategy, and that you are now becoming more of a TSLY investor than specifically TSLA. Can you walk us through if that's even correct, or
Yeah.
how you're balancing all that?
Yeah. So it partially correct. So I was building up my Tesla portfolio and I'm just like, I was literally adding every penny I could to Tesla. And I was like, and I love Tesla. I think Tesla's probably the best company we could potentially be investing in for the next several decades. But knowing the macro environment, knowing everything else that's going on, knowing the near term situations that Tesla is facing, I'm anticipating a couple years of relatively good buying opportunities before we really see another parabolic jump in the stock price. Just being realistic. So my thoughts are I don't really enjoy my job all that much. Knowing that my son's going to be graduating, I'm like, I was like, I'm probably going to be moving and may not have that same source of income coming in from a job. How can I build up some income coming in to be able to purchase even more Tesla stock during this down time? That's when I kind of opened up my eyes to some dividend stocks.
Mhm.
And then TSLY, Tesla popped up, and I was like, that's some massive yield. I don't like to be a yield chaser. And, it's still a really new ETF that's out there. So I want to still be cautious with it. But if I can bring in some cash flow from that to kind of speed up the process, because so many people are like, dividend investing takes forever because you have to invest so much capital in it. It could take 10, 15, 20, 30 years before you actually start seeing the benefits of it. I don't want to wait that long. How can I speed that process up? That's where Tesla came in. So I saw these high yield ETFs. I'm seeing other REITs that are out there. I've been looking into REITs for a while. And so you look into, BDCs, business development centers, REITs, high yield income. There's a lot of other high
So,
yielding
so
ETFs that
real
are
quick,
out there. Yeah.
real quick,
Yeah.
for people who might still be watching, sorry, I'm self-deprecating here. Can you explain to them what TSLY is and what REITs are in case people aren't familiar with, any
Yeah.
of the real estate stuff or the ETFs?
Yep. So TSLY is a high yield ETF. It is strictly based on covered calls. So it's not even owning the shares. There's a lot of other covered call ETFs that are out there like JEPI, JEPI, JEPQ. They do own the underlying securities and they play covered calls off of them. Tesla, on the other hand, does it synthetically. So they're purchasing covered calls and puts at the same time, creating a synthetic share. This is how they're able to generate such high yield. Now, obviously, the question is there going to be NAV erosion? That's net asset value erosion off of this, which over the long term, you end up losing the value of your security, but you're getting the dividends, but it balances out to being nothing. So you're not going to get any upside value out of TSLY. So if you're looking at this as a long-term growth play, not going to be for you. You're going to get much better returns out of Tesla stock itself. TSLY is strictly for income. REITs are kind of the same way. REITs are a real estate investment trust. So for people who want to go out there, and I was one of them, wanting to invest in real estate, maybe a multifamily home, get some money that way, you can do it this way. So a REIT is like there's a Realty Income, Arbor Realty Trust, Vici Properties, a bunch of these out there have done this investing into other properties for you. So you are just investing your money into companies who are doing real estate investing. And because of the way they're structured and set up, they're required to pay out 95, it's like 90+% of their income to dividends, which is why their dividend payout is usually around 8 to 10% because they have to pay out literally everything that they have coming in to their investors. So this is one of those things where, again, if you wanted to invest in real estate, but don't want to go through the hassle of being a landlord and all of that stuff, you can invest in a real estate trust. Problems with these
Perfect.
two are both they're non-qualified dividends, so they're going to get taxed as regular income. So just be cautious of that.
That's beautiful. Yeah, thanks for that quick tangent,
Yes.
just in case people aren't familiar. But
Yes.
so, okay, so continue
Yeah.
with
Yep. So for me, I just invested in all those. So now, anybody who's watching, if you guys follow me on X, I just posted it this morning right before we got on here. How my dividends have grown. So I started this year with almost nothing, and I started actually with CDs. My dad let me know that CD interest was popping up there, and at the time it was like 4.5%. It's now 5.5%. But I'm like, I'm getting 4.5 to 5% on my cash that I had put aside for real estate because I was waiting for the housing market to come down, which still hasn't. But instead of having my money just sitting in a savings account making me nothing, let me put it into a CD. Still going to be a secure, safe place to be. And I'm going to get 5.5% versus nothing. And so, yep, there it is. And so this year I started off making, $464 is what my annual income was going to be based upon the time. Now, everything I've learned over the course of this year, I'm up to $9,700 is what my projection is for annual income because of my dividends and CD interest. And so for me, and this has been a constant tweaking of everything. I'm moving it all over the place. And I started to, I don't want to say lose trust in the high yield income ETFs, but I didn't want to, I was starting to hit my risk tolerance threshold. And I did not want to put too much more money into those because
mm,
they haven't been around long enough for me to really fully trust them. So I've now hit that. So while it has sped up significantly recently, it's going to slow down as I put more of my capital and drip more of that money into more stable income plays. And now I actually have a lot of other stocks as well, other ETFs. So I have like basically created my whole entire spreadsheet, which I call the Oracle ETF, which is all the different stocks, cryptocurrency, and ETFs that I own. It's my entire portfolio is my Oracle ETF.
So, can you explain this part right here to me? I was stopped
Yeah.
out of Tesla and moved into high yield ETF. So, did you have like a trailing stop loss
Yeah.
for your Tesla shares?
Yep. And for me, like I was very adamant, do not sell Tesla. I didn't want to sell it. But then I thought to myself, as I was building this whole spreadsheet up, I was so lopsided with Tesla. And I have no problems with being lopsided with Tesla. I mean, Warren Buffett does not believe in, setting certain, hey, I can only have 5% of this. I mean, Apple's 50% of his portfolio right now. So I'm not a believer in that. But what is Tesla going to get from me in the next 2 years? Most likely, nothing. That's realistic from I could be totally wrong. Maybe Tesla takes off next week. I could be way wrong. But looking at the macro environment, looking at Tesla itself, just looking at this earnings call we just had, knowing that we are seeing most likely more price cuts coming and lower expectations when it comes to deliveries, it's not going to bode well for Tesla itself. We know that we're not going to see a turnaround until the interest rates come down. We know that's not going to happen most likely until a year from now. So I can't, yes, I can see this is a great buying opportunity, but can I bring in more cash flow for my own personal situation to retire early and add more to Tesla at the same time? And so for me to be wise like that, I was like, let me put in a trailing stop. I had 73 shares. I'm like, I put in a tight stop for 3 shares just to get myself, an even 70. And I did 5 shares at 10% and 5 more shares at 15%. I'm like, that should be enough room. But if we're falling that far, let me protect myself because we're probably going to fall further than that. Sure enough, both of them got stopped out. Actually, one of them just missed the day of earnings. It missed by like $1. And then, of course, I ended up losing another $10 a share from the next morning. It is what it is. But I mean, I ended up getting stopped at about $230 a share for one of them and 227 for the other. So now we're down at 211. So it looks like a good move on my end, at least right now, because I sold before it dropped even further. But I still have 60 shares that I'm holding on to, and I don't plan on selling those. And now my cost basis is 215. So if we come down further, I'll probably end up putting in a dollar cost average of $5 a week again into it and just kind of monitor it from there. But that was it. So that's just wanted to protect myself, and I was able to
Mhm.
put that money into another place where I can generate more income. Again,
So,
maybe I'm going to be wrong and Tesla takes off and I screwed myself, but we'll see.
so, so what I'm hearing is that you're a little, I don't know if bearish is the right word, but a little just neutral
I'm
with
neutral.
Tesla.
I'd say I'm bearish. I'm bearish near term.
Okay.
I'm very much in the Gary Black camp when it comes to some of these things, which is I see a lot of how Wall Street sees things, and Wall Street only looks out 12 months. Like I fully believe that Tesla's going to do FSD, AI, robo taxis, Optimus. I fully believe in all of that, but I also realize that that reality isn't going to happen for at least 2 to 3 years. So
So, okay. So here's my conundrum with someone like a Gary Black, and I guess maybe you here, is that right now, like you have a you. I mean, let's start off with this. You still think 260? That's your price target, right? By year end.
Oh God, I'd have to update mine. I've been so busy, I haven't even looked at it. I would say I don't even know if 260 is realistic now after these earnings. Don't even know if 260 is gonna
All
happen.
right. So I'm still in the ball camp that will be at 300 by the end of the year.
Okay,
So
I think that'd
how
be
do you
awesome.
how do you square this? Right now, we see EV adoption is growing. It's growing exponentially, is what we're seeing, right? And it started off in China, California, Europe, and then East Coast USA, and it's the US is slowly filling out, right? This is not just how EV adoption is happening. This is normally how tech gets adopted
Yeah,
lately, right? Like it'll start in California, then you'll see in China, and then you'll see East Coast, you'll see Europe, and then you know everything between tends to come as a laggard. But so you agree that EV adoption is going to continue to happen, and it's on an exponential curve.
yep.
Do you agree with that?
Oh yeah,
Okay. Now, with everything happening right now, with 10-year is up high, making interest rates even higher for auto loans, it's extremely expensive. But EV adoption is still going up. And what we see is that Volkswagen is saying that they're having issues moving EVs. Nobody seems to want theirs. We see GM and Ford pausing and pushing out anything that they're doing with EVs. And on top of that, all these companies are losing money, and there's just a whole bunch of systemic issues. Meanwhile, Tesla is saying, okay, we're going to continue to cut costs. We're going to continue to sell our vehicles and get the vast majority of what's out there for desire and purchase of Teslas. Forgetting about margins, right? I personally don't really care about the margins because I think growing your base, growing that volume is very much the akin to the Amazon approach, where they were saying, hey, we are willing to be negative and lose money to dominate and take over market share. I am of the opinion that Wall Street isn't stupid and they're going to pick up on this sooner than later. I think a lot of them are picking up on it. You see Adam Jonas, he seems to get it. There's lots of other people, but do you not think that that's how things are going to play out, where Tesla just becomes very dominant and they essentially more so now than they even, as far as dominating the EV market, they're going to dominate even to another level.
Oh, I think they are, but I think it's going to take 2 years. And the
Okay.
reason the reason I think it's going to take 2 years is looking at the timing of it all. EV adoption is happening, but the competition, which we know isn't really truly competition, at least here in the US, was still helping that facilitate that moving along. So with all of these big players taking a step back and slowing down, that's going to slow down the EV adoption. Going to be great for Tesla to be able to fill that, valley void that's coming in the transition from ICE to EVs. So Tesla will be able to take that over more. The problem we're running into though is, again, going back to interest rates, regardless of whether Wall Street picks up on it sooner or not. I love that Adam Jonas has seen this. When you're looking at institutional investors like a Gary Black, they're trying to do what they have for all of their investors. You start looking at a Tesla who we know for the next year, like we had talked about, they're going to be cutting prices. So their actual numbers for the next year are going to be coming down. I do think that they're going to turn it around. But despite that, what do institutions want to do for the next year to bring in a return for their investors? Having your money in Tesla may not be the wisest place to put it for the next year if they think that we're not going to see any sort of real momentum and progress going forward until the interest rates come down. So they're going to put their money elsewhere. This is just a whole macro thing anyway. Putting money into stocks right now isn't the best place to put your money. A lot of people want it in safety. A lot of people do think we may get a recession. We may get a massive market pullback. You don't want to invest too much money into the market if you're anticipating that. So you have to protect yourself. So there's just not a lot of money in the market right now as it is. So this isn't a Tesla specific situation from my viewpoint. It's more of a macro environment situation. So if the entire macro environment isn't putting the money into stocks right now, where can we put our money to get some sort of returns? I think that's more of what's going on than a Tesla specific issue. Once we get past that and we get past the point where the Fed's going to be dropping interest rates, then we're going to start seeing money coming back into the market. That's when we're really going to start seeing the stock price push up. So I think, to me, that's just how it's going to play out. And going back to your point about how the adoption takes over, I had a conversation with a customer at work the other day. And for those of you guys who saw on X, this is the
Oh
story I
yeah.
was saving for you guys. So he comes in and, so you guys don't know, I work in construction, retail, and rentals. So I work with, and this is like, the company's like Home Depot, but it's big boy Home Depot. Like we're supplying, giant buildings, all the road construction that you see going on. Like we've supplied Amazon warehouses, Frito-Lay warehouses. That's the kind of stuff that we work with. So this guy's in and he says, he's been playing this raffle for 40 years and he finally won, and it was a Mustang that he won. Awesome. But he didn't need a Mustang. He's like, let me go get myself a new truck. So he went down to the Ford dealership, and it's the place that he goes to get his trucks all the time. He saw a Ford F-150 Lightning on the floor and he goes, oh, this thing looks hot. Asking about it, he goes, maybe I'll trade in my Mustang to get that. They said, don't even bother. We know you. We know what you do. This truck cannot tow anything, even if you're trailing like a homeowner trailer with a lawn tractor, you're going to get 40 miles. That's it. So I was like, oh. And this is the dealership telling him straight up that this truck is not going to function for him on a job site like he would want. So we started getting into a further conversation. He's on the board for all the whole town that he works in. And I guess they had a moratorium for a year. And in that year discussed, all right, well, what can they come up with for some plans? So this is another reason why I'm so bullish on Tesla and, the direction that we're moving in the future. Their town itself. And he's like, I'm open to renewable energy. He's like, but he's not a huge fan. Like there's a lot of stuff I had to educate him on. Like he still thought cobalt was getting dug up in mines by children for Tesla, all sorts of wild stuff, which is why Tesla needs to advertise at least the educational piece of stuff. But he was talking about how it was his idea. Any new house that's getting built is required to have at least one charger in it. If they're going to have a garage, one garage has to have a charger. If you're going to put up a commercial building, For every 100 parking spaces you have, you need to have 3 EV chargers there. So these are now town mandates that are coming up in different towns all over the place requiring this to happen. So when you start looking at what you want to invest in the future, this is it. But it's a very slow process. We know how quickly governments don't move. So this is why for me, I'm just, I don't want to say bearish near term, but I think near term we're going to have flat movements, and it's more going to be macro driven than it's going to be Tesla specific. Tesla's going to continue growing. Again, pay attention to what Tesla's doing fundamentally. I mean, they're still growing their business regardless of the fact that it's a little slower than we expected. They're still growing their deliveries, they're growing their revenue, they're still building the business up. It's sort of like if you took an hourglass and you turned it on its side. We went from this massive thing and we're shrinking down, but now we're going to pop back up again. Sort of what we're in right now. And I think that's what's going to end up happening is we're shrinking down at the moment, getting ready to explode. And this is something I think you and I actually talked about it last time we were on was, when you look at the compression, it's like a spring. And so you got the stock, it's compressing right now because we've got interest rates are higher. But when you look at the good companies coming out of it, those are the ones going to spring back up the fastest. That's Tesla. So we don't know when it's going to happen. And that's why I'm trying to be as quick as possible to get this cash flow coming in to put money back into Tesla as much as I can. Because I don't think the window is going to be that big. But I think we're going to have a window of probably a year and a half, maybe 2 years before it comes up.
Okay. So that's interesting. So let me, because I disagree with almost everything you said.
Nice.
In a very polite way. This is what I would predict is going to happen. Not as financial advice. What I think is going to happen is, first of all, I agree that right now it sucks out there. Right now it's turmoil. It's everyone keeps talking about a recession's coming, etc. I think we're in a recession. I think it's comical that people think it's coming. I think we've been in a recession.
Yeah.
Those 2 negative quarters we had, I think we've been in a recession since then.
Yeah. How many times do they adjust numbers afterwards? Like, oops, sorry, we were wrong.
Yeah, exactly. So I think we've been in a recession. You saw it in tech first, massive layoffs, stocks took a beating. Then you saw it move over. Like right now, we're seeing it in banking, massive layoffs in bankings. We clearly see it in autos with huge buildup at dealers. You're seeing it in real estate for sure, right? Maybe not a like recession in real estate the way people would think about it because of '08, '07, '08, '09, but I think that's a bad framing of it. Not everything is going to be like a '08, '09. The recession that we have in housing right now is that nothing's moving. Everything's stagnant. Realtors are complaining. Home builders are complaining. They're building less because nobody can afford it, right? There's an affordability crisis and it's just stagnant. And that itself is a recession within the housing market. So here's what I see happening pertaining to Tesla. Besides what I just mentioned, as far as people are going to be making less EVs here in the States, meaning Tesla's going to be able to be the ones to fill in those orders, especially since they keep bringing their prices down, which it becomes like a no-brainer. I also think it's a auto market, right? Like Elon says, not just an EV market. And we're at a point now where it makes more sense to buy an EV than an ICE vehicle for a bevy of reasons, right? Whether it's the maintenance or just your monthly payment at this point, because it's more cost effective. But then we're going to get into the end of November. And there's going to be, I think, a renewed sense of excitement around Tesla because of the Cybertruck release. I mean, this is going to be a big deal, I think. I mean, for goodness sakes, I mean, like, just look at this. Like this,
That's awesome. I love
this
that.
is
That
this
I
is
actually
amazing.
showed that picture to the guy at work, and I was like, "This is what the Tesla Cybertruck is going to be." And he doesn't like the look of the truck. He goes like, "But that's pretty awesome."
But you know what? He hasn't seen it in person. And I'm telling
Yeah.
you,
Well, that and not only that, but like he works in some cities, and he's like, "That would work out well in cities where we get shot up." So
yeah, when you see the Cybertruck in person, it looks different. It's I don't know how to explain it. It's the only product I've ever seen like this where it's like, yeah, it looks a little weird on a picture, but in person you see you're like, "Oh, what is this?" Like it's just like it hits you and people will see. But This, I think, is going to be a big lever for the stock. I think people are going to be excited about this, but not just that, but we're going into Q4. Q4 is the best quarter for autos in general. Like I said, GM, Ford slowing down, Volkswagen slowing down, Tesla's going to be there. But on top of that, we're going to have great numbers. I think we're going to end the quarter with us knowing that Tesla hit their 1.8 million number, maybe even exceeding it. We're going to end the quarter with a certain amount of Cybertrucks out there. We're going to end the quarter with now the Model 3 Plus, the refreshed Model 3 is going out there. That's going to be exciting. We're going to end the quarter going into 2024, where we know now in the States, you will get your tax credit at the point of sale. So that's going to be a huge, huge boost, I think, for Tesla demand. So I think you have all these bullish sentiments going into it. And if nothing else, we see how energy is ramping up like crazy. And I really think that we're going to start getting more things with FSD 12. And that's going to be a very big step change. Last thing I'll say, just going into like this fourth quarter into Q1, AI Day. In the past, AI Day has not moved the needle for Tesla. If anything, it's been almost the opposite. But as you've seen in the last two earnings calls, and I imagine Q4 will be even more, there's more and more and more questions about Tesla and AI. It's ramping up. People are caring more. So Tesla's next AI Day, I think there'll be a lot of attention on that. So I just mindful of what's going on with the economy and interest rates. Having that tax credit point of sale is going to be a huge price cut for Tesla that they get the benefit from. Having refreshes out there, having no competition, I just think there's so much positive momentum that's going to come in. And while I still agree, outside of Tesla, it is a nasty market out there. To me, that's when we want to be diving in and buying as much as possible. Because sure, yeah, lots of money managers out there they're stuck in a 12-month cycle because they need to show return to their investors. So maybe they're sitting in the money market. Maybe they're going to an ETF. Maybe they're buying some bonds. We don't have that restriction. We don't have that 12-month restriction. So that means I can take benefit now of these lower prices, because what's inevitably going to happen when the Fed does decide to cut rates, the stock market is going to front run that by probably 6 months. And I don't know when that's going to happen. And it may not be for good reasons, right? But I still think the stock market will front run that. And I just feel like there's all this momentum. So then you add in everything I said about Tesla just now. It seems really inevitable to me that this is, to your point, we're compressing. We've been compressing, but we are at the same place we were like back in 2021. And so much has happened since then.
Oh, yeah.
I don't know. It just makes me even more bullish when I see everyone dying and then Tesla is just thriving. So I just went on a freaking tirade there. So tell me why I'm wrong.
No, well, because you and I see the exact same thing, just with different timing.
Okay.
And looking at it, and I think all those positive catalysts are absolutely right. And you're spot on, because I've been pushing off getting my Tesla because of the fact that the EV tax credit's awesome, but I don't get it at the front. And I'm like, I still budget on a monthly basis. So what is my monthly payment going to be? And this is exactly what Elon had said on the earnings call. So for me, my monthly payment, yeah, the tax credit's awesome, but I don't want to be paying $600 a month. If I got that tax credit right up front, it'd be $300 a month. That is a huge savings. So I do think that that could be a potential great catalyst going into the beginning of the year. So the 3 Fresh, I think, is going to be great, because that coming out, we already saw they're now starting to deliver in Germany. Obviously, they punted on the question as to when it's going to come to the US. But we know that back in December, when we heard the rumors about Shanghai, which did come true, we heard that shortly thereafter, Fremont was going to come through. I don't think Fremont's going to start until the beginning of the year, because they want to finish this year off strong without taking a factory down. But that will most likely be coming in 2024. The reason that is hugely important is because that's going to lower the costs even more of the Model 3 in the US. That in turn is going to be able to allow them to cut prices more. when we have the compact car coming out, and the reason they're not giving us any information, and Gary, if you're watching this, I fully agree with you that they need a compact car, but they cannot give us information because the Osborne effect will destroy any sales that we could see on it. So if Tesla in 2024 can produce the 3 Fresh with the EV tax credit given off up front, now you can get a Model 3 at the time of sale for under $25,000. Presenting information about a compact car isn't going to throw off the Osborne effect nearly as much. So that's going to be huge. But is that really going to take into effect? What is the economy going to look like 3 months from now with interest rates as high as they are? We've already seen a bunch of businesses starting to fold. Is that going to hit the economy? I play the same thing in my head as you do, is the market looks 6 months ahead. So if they're anticipating fall as being when we're going to be seeing interest rates getting cut, does that mean that in spring we're going to start seeing the market start to buy back up? Obviously, there's a lot to play out between now and then. When you look historically on the macro side of things, when the market has seen interest rates get cut, it is because of something happened in the macro environment that caused the Fed to cut rates with lagging data. So, is what we're going to see causing this going to be a bigger problem? We also saw the inverted yield curve, which historically since 1967 has said this is going to be a recession. We both agree that we may potentially be in a recession right now, but we just saw the inverted yield curve. Does that mean we could see a worse recession coming in the next 6 months, which maybe that's the reason the Fed has to pivot? So to me, again, more macro related, I think, on the cause, because I think you're absolutely right with the Tesla specific catalysts. Energy is the big one. That's the sleeper that I've been talking about for 2 years now. That is now starting to make an impact on the bottom line. That coming up. And like I said, with this municipality, with this gentleman I was talking to, they're putting up all the schools that they're putting up. They're putting up mega packs, not Tesla ones, but they're putting up. He didn't even know what company they were using, but they're using renewable energy mega packs.
So
They're
it could
coming
be
to
Tesla.
municipalities. Tesla's going to be putting these up everywhere. So now I think you and I are just see it the same way, just a matter of when. When is that spring going to get released?
Okay,
You think
that's
it's going to
fair.
happen sooner than later? I think it's going to happen in 2025.
Well, I think well, it depends like what we mean as far as the release. I don't think going to 300 or even 400 is the spring being released.
Oh God, no, no,
Like
I don't think
I
so either.
see that as just getting back to kind of probably where it should be in my opinion right now. Um but that's factory in Cybertruck, which isn't even out yet, right? Which a lot of people won't factor that in. That's factoring in, the point at sale credits, which people won't factor that in because it's not there yet. So that, which is weird to me. It's like if we know certain things are, we know a date when things are going to happen. Like you should be factoring that in. Like I get
Yeah,
if you say, well, I don't want to factor in FSD because, well,
we're
that's a
not
technology we
sure.
don't
Yeah.
know, right? I get that, but these seem pretty straightforward to me.
But
So
the Cybertruck, now my kickback to the Cybertruck too, and Elon has said this, and I've been talking about it all year. Cybertruck's going to be awesome. Love it. But we don't know the pricing. And some of the things that Elon said are hinting towards it's going to be on the higher end of pricing.
I
I
hope
do
so.
think that at least one of the models will be below the tax credit threshold. But are they going to start with that model? They're going to start with the higher end models. We know of, I guess, 2 versions of it now coming out. Are there going to be more? And then Elon has been very adamant about talking about how slow this ramp is going to be. So to me, I think the excitement's going to be there. But once we start seeing, all right, it's released on November 30th, 1 month of, production, what are we going to be seeing for 1 month of production? 50, 100, maybe? Who knows? And I think those numbers are going to kind of, it's either going to be awesome for the market or not so good for the market. I don't think there's really great expectations out there. And Elon's been doing a good job of making sure expectations are very subdued for this. I'm just afraid that some people have very high hopes for this and that he's sandbagging it. I don't think he is. I think we just need to be patient. I think it's going to be awesome, but I think we need to be patient.
Yeah, I think it's a little bit of both. I think there is a little bit of sandbagging in there. Um, but I also think that the Cybertruck is I mean, if you're saying 18 months to be fully ramped, that's not a long time.
No, God.
Like that's it's
For
actually
Tesla, that's a long time when you look at things like
yeah.
Shanghai, but for Tesla, absolutely not.
Yeah, but like you got to think about it. So Q1 of 2024, I would wager that they are going to be producing more Cybertrucks than what GM, Ford, maybe even what Rivian is doing.
Oh yeah, I would say 10 to 15,000 in Q1. Hopefully, that would be a nice number, I would think.
Yeah, so I don't know. I think there's a little sandbagging in that. Um, what are your thoughts on FSD? Have you experienced FSD? Do you have any thoughts on
No,
it?
yeah, I haven't experienced it recently. My buddy who has his Model Y, God, every time a new, because it was right when my son was learning how to drive, so it was awesome. So I can compare my son learning how to drive and FSD learning how to drive at the same time. And gosh, FSD at least a year ago was right at the same place that a 16-year-old first learning how to drive was at. And I haven't experienced it recently, but I've heard all of the great progress that it's been making. Obviously, Omar puts his videos up all the time. So I've seen great things. I've heard great things just watching Elon's drive alone with version 12. Absolutely insane. I can see this coming, and I'm hoping we see it widely released in at least Europe and China, because I know those are the next two places they're going to do it. I don't know if he's waiting for version 12 to make this happen so that he can go straight AI with all of it. I don't know. I would say we're going to see version 12 for sure in 2024 get released. It's just going to be a matter of, you know, how much is it going to get released to everyone, or what they're going to be doing, and then obviously regulations play a huge role.
Yeah, yeah, absolutely. Yeah, I think so. I've got the newest version right now. I drove it yesterday for the first time. I tend to not give any like reviews or feedbacks on it after the first drive because I tend to notice that it takes like it's almost like I don't. I might be making this up, but it's almost like there's a calibration where it takes like 2 to 3 drives into it before you actually know what that builds like. And so, right after we get done here, I'm going to go do a quick drive before the Buccaneers game and just see what that's like. But yeah, I'm telling you right now, they are so freaking close. Like just seeing it, just seeing where we were at the beginning of the year to now is it's been the progress is accelerating, and V12 seems extremely promising. So yeah, I'm excited for that, and I kind of think that we might start to see that roll out at the end of the year.
I would say, I mean, for me, and granted, like I said, the two times I had was about a year ago and 18 months ago. And the progress between those 6 months way back then was significant. There's a roundabout that we tested both times. The first time it just failed miserably doing it.
Mhm.
Second time it failed the first time. The second time it did it flawlessly. So it's learning quickly. So I could just imagine if the 6 months between those two made that much progress, where are we at from a year from ago? So I absolutely can believe that it's making massive progress. And yeah, version 12, that whole switch just to straight AI, so the learning, and then with Dojo coming on board to be able to, and I reference the conversation you and I had before of having data coming in is great, but unless you have a way to analyze that data, it means nothing. And having Dojo coming on board to analyze that data is going to make the huge difference. That's when you flip the switch for Europe and China, for it to be able to utilize all of that video and analyze that video data coming in to make FSD functional for Europe and China. That's the game changer. And if we see at the end of the
Yeah.
year, that'd be awesome.
Yeah, I think we'll probably start to see it at the end of the year. I'm hoping. I also have this theory that they're with all these like dot releases with this 11 version. I feel like they're testing things out for 12, but I may be wrong because they haven't updated any of the notes for the last like 3 versions. It's been the
Oh,
same
really?
notes every time. So it's like, all right, well, what's happening? Why are you pushing this out? Like, what are you guys? Like nothing. It's like, all right, that seems a little
Yeah, that is strange that
sneaky
there's
to me.
nothing in notes, but they've got a new version, but no new notes in it.
It's
Yeah.
it's the exact same notes for the last 3 versions, so
Huh.
yeah, it's there's something I think that's going on there. Listen, Tim, I know, we're past the hard stop that you had.
Oh, it's all
Um,
good.
we have so much still to talk about. I'll have to get you back on. Like, we didn't even touch on anything health related, and I definitely want to talk about that. And I
Yes.
want to talk more about Tesla. I feel like, we just started talking about Tesla, and I want to hear your thoughts on it, shorter term, longer term, where you think the stock can inevitably go, and why don't we actually leave it on that? Where do you think Tesla can be, let's say 2030? Like
20
not financial advice, pure guess, hopium, whatever. Where do you think we can get to?
Not financial advice. My current price target for 2030 is $2,700. So
Wow.
basically a little over a 10x from where we are right now in 7 years. Six
And
years almost at this point.
what's all baked into that? EV, energy,
Yep. So that's
FSD.
that's EV market. That is with the EV market um being smaller than robotaxis at that point, FSD obviously being solved and robotaxis being out there, energy being almost comparable to the profitability of EVs at that point is where I had it. Looking at the way they're progressing now, might be more, who knows?
We're ahead of it.
Um, and and then Optimus, for me, I have Optimus just kind of being one of those. All right, we're in the factories and we're looking at it almost like we're looking at the semi truck right now, where they've got it out there. There's some people who are kind of testing it, getting ready to see what this can really do in the factories. So that's what's baked into all of mine. Where's yours?
Um, so all right, so that's a great question. So the way I look at 2030 isn't where I think the stock will get to. It's working backwards from a financial independence perspective. So I think we've spoken about this before about, the whole, fire movement, financial independence, retire early.
Yep.
So my wife and I hit that a couple years ago, but then it became, all right, well, we're still younger. We still like what we're doing for work. Why don't we aim for fat fire? Like what, like let's go big here. And I'm happy that we decided that because, the economy just took a crappy 3 years, and I would have hated to have, called it a quits and these be the first few years,
Yeah.
like, man, that would have sucked.
Yeah, that's one of
Um,
the things I was telling everybody. I was like, this is not the time to quit your job. This is the time to
yeah,
get extra jobs and have as much cash flow coming in as possible.
yeah, exactly. But when we hit our number, this was like October of 2020, right?
Okay.
So like Tesla's booming, like we're feeling good, everything's great. And we're like, all right, like,
I
come
could be
on,
locked up
like,
like this forever.
yeah, exactly. Like there's no issues. Um, but so the way I look at it is I put a $1,500 price target on Tesla for 2030. And what I try to do is figure out, well, what's my number? Because to me, retirement is a net worth number, not an age.
Yep.
And so once I know what that number is, I divide it by $1,500 for Tesla, and that's how many shares I need. And so that's kind of how I'm looking at it. And the reason I use 1,500 is because Kathy Woods is saying 2,000 to 2,400 by 2027. Elon has mentioned stock being able to get to 1,500 by 2030. Ron Barron has said 1,500 by 2030. So I'm trying to use that as a stagnant number,
Yeah.
like keeping that, right there, and then making everything else work around that number.
Yeah. And I
So
think that's a great conservative number because what's like chances are we're most likely going to hit that. And if we go above that, hey, bonus for you.
exactly. So I have that number as 1,500, right? And that's how I work backwards to how many shares I need, et cetera. Now, what do I think it can get to? I see a world where we could see, $4,000-$5,000 a share by 2030. Obviously a lot of things would have to happen, but I also look at it, look, we're at the end of 2023. Call us 2024. That means we have another 6 years. And if you just look at where we've gone from 2020 to 2023, that's 3 years, and we have oh my goodness, FSD has come such a long way. Tesla has come such a long way. Cybertruck's coming out. Optimus was introduced. Optimus has progressed immensely. Like all the factories that were built. Just the demand for EVs going up. The refresh. The more talk of the unbox method, the next gen vehicle, version 12. All this stuff happened in 3 years. What happens when I give it another 6 years? Right?
Oh yeah.
It seems it like just the rate of progress seems to be happening faster and faster. I mean, just look, get into a vacuum and look at Optimus from them having a puppet to rolling out on stage to the last video we saw with the dexterity of flipping. I mean, it is moving rapidly. So, man, time under tension, right? Time under 6 years. I feel like it could be bigger than what we think. I mean, to see uh, I'll stop after this point, but um, sorry, I get passionate about this.
Oh yeah.
If we go back to when it was like say 2010, and we talked about there being $1 trillion company, people were like, "There's no freaking way that's going to happen." In a decade, we now have a $3 trillion company. We
Right.
have a $1 trillion company. I don't want to say it's the norm, but there's many $1 trillion companies,
Yeah.
and we saw that in a 10-year span. So I think the mind struggles to see what things can be and how big things can get, and I think we might be in one of those periods again, and people might be making that same mistake, thinking, "Oh, law of large numbers, it can't happen," etc. People are saying the same thing about Apple. People are saying like law of large numbers, Apple can only get so big. They've they've proven that wrong time and time again. So I could see it getting to like a $4,000 or $5,000 stock price, but I'm investing and accumulating based off of a $1,500 price target. So
And piggybacking on your comment about the last 3 years and how much Tesla has grown from a financial standpoint, think about this. Elon is paranoid about 2009 and 2008 and what happened to the company then. He is hoarding money like a dragon. They just
yeah,
put $3 billion onto their cash stockpile in this quarter alone. What happens when we get to a point where Elon now feels comfortable deploying that capital? Think about how much capital they have deployed, building FSD, building factories, the Model 3 refresh, the Cybertruck, Optimus. They're deploying all of this capital all over the place for energy and everything. That's with him being ultra conservative. What happens when we get to a point where he's no longer feeling like he needs to be ultra conservative? What are they going to put money into at that point? We've got buybacks. We've got other things. We've got the factories then popping back up again. We've got this expansion and growth over the rest of the decade that is going to rival what we saw in the first 2 years of this decade. So, yeah,
yeah,
as soon as we hit that point, it's game on.
yeah. No, that's a great point because it people may disagree with this, but I think the best investor of all time is Elon Musk.
Oh, he's one
Better
of the
than Warren
best
Buffett.
capital allocators I've ever seen in my
Yeah.
life.
The fact that he's been able to build companies, sell companies, take that money, put it all into another, like we haven't seen him strike out. It hasn't happened. And so like everybody took it as a negative thing when he was talking about, being cautious moving forward and all that. To to me, I was like, that's the most CEO thing I've ever seen him do.
Yeah.
It's like
Not
I want
in
to
a time like
protect my
this, in a company I'm invested in a time like this, I would like the CEO to come out and say, "Hey, you know what? I'm not sure what's coming up. I want to make sure I protect the company and my shareholders by being conservative right now." Hell yeah, that's what I want.
Yeah. But meanwhile, still investing billions into servers and
Yeah.
FSD and the current factories we have. Like I it's just insane. I mean, we can go on forever here.
Yeah.
Uh,
We'll save it for part
let's
2.
yeah, let's leave it there for part two. Maybe part two we can pick it up with Tesla again, and we can
Yes.
dive into some health now that we've learned more about you. And listen, I wish I could say good luck to you and your Charlotte Panthers, but I'm not gonna
Yeah.
say that
They're going to lose
because.
again. It's just they're going to lose in the bye week. I mean, that's just how they roll. They're good.
All right, man. Tim, thanks again, and thanks to your son for giving us a little extra time here. I know
Yes.
he's probably waiting for you to pick him up, so I appreciate it. And everybody, go follow Tim. He's a must follow. He's a jewel in the Tesla community as far as I'm concerned. And yeah, I appreciate you looking at things from a different lens and sharing us unfiltered and just completely being open and transparent with your spreadsheets and everything. It's awesome to follow your journey.
Thanks, Nick. I appreciate it.
All right, cheers.